Now it's time to go over one of the most powerful concepts in technical analysis, and that is support and resistance. But now then, what is support and resistance? Well, support is basically a price level, or to be more precise, a price area where a stock or cryptocurrency or forex tends to find buying pressure and bounce. A support level acts as a floor and supports the price, and hence the name support level. A resistance is pretty much the opposite. Resistance is a price level or area where a stock or other asset tends to find selling pressure and as a result fall. It acts as a ceiling for the price and provides resistance and preventing the price from rising further. So let's quickly take a look at the chart right here. Here we have a clear example of support and resistance. We can see here that every time the price reached this support area, we found buying pressure and the price bounced. And conversely, when the price reached the resistance area, we found selling pressure and the price fell. And so far, this is just the basics, but we are very soon going to take a look at how we can combine support and resistance with trending markets to build a trading strategy. But before we do that, we have to learn about a very important principle. Let's take a look at this chart right here. We can see that every time the price reached this gray area, we found buying pressure, indicating that this is a support area. However, eventually, the support area broke and we saw a massive move to the downside. And before this break, we actually saw multiple signs indicating that the support level was getting weaker and weaker. And we will talk more about these signs later on in the course. But what you can see here is that after the price broke the support, the price eventually came back up to the previous support level. We saw resistance and then the price collapsed to the downside. And this right here is a very important principle. When the price falls below a support level, the same level can later flip and act as resistance in the future. This is exactly what happened in this example. And the opposite is of course also true. So if we have a resistance level and the price breaks resistance, the resistance can later on flip and act as support. And now you may of course wonder, why does this happen? Well, in this course, we're not going to dive deep into the psychology behind support and resistance, but a simple explanation here is that this can happen because traders and investors remembers the level, and they also potentially have trading orders around the level. So remember here that candlestick charts are not just random rectangles on a screen. Candlestick charts tells us a story about how buyers and sellers have been trading in the past. And as we can see on the support level, we have been seeing lots of buying pressure coming in multiple times, meaning that many people have bought around this level. So when the price broke below this level, this means that the buyers that bought here are now in a loss. So when the price eventually recovers, that means that the traders that bought on the support are no longer in a loss. And many traders will see this as an opportunity to sell at break even, and this leads to selling pressure. And another reason that can lead to even more selling pressure is that traders knows about this principle. It can act as a self-fulfilling prophecy when traders enter short positions at this level, expecting the price to reverse. And when you enter a short position, this actually leads to even more selling pressure. So now when we have a basic understanding of support and resistance, and we also know about the rules to determine what kind of trending market we are in, now we can finally put these two concepts together and build a trading strategy. So first of all, what kind of trend are we looking at right here? Well, we are looking at an uptrend, right? And why is this an uptrend? Well, we can see here that we are in a market that prints consecutive higher highs, while at the same time we are maintaining the lows. Here it can be a bit hard to see, but if you look closely, you can actually see that this low is lower compared to this low. And remember, we are still in an uptrend as long as we are maintaining the lows. So it's only if the price falls below this level right here, we are no longer in an uptrend. And one of the best ways to use support and resistance in uptrends is to look out for the resistance that the price needs to break in order to create a new high. We want to look out for this resistance to, in the future, flip and become support. So as you can see, this right here is previous resistance. When the resistance breaks, we look out for this resistance to flip and become support. This moment right here can many times act as a great buying opportunity. However, and this is very important, to make this an even better buy signal, we can combine this strategy with, for example, indicators, and we'll talk about some of my favorite indicators to combine with this strategy very soon, but we can also combine this strategy with candlestick patterns. And of course, we will also talk about that later on in this video. And last but not least, we can also combine this with chart patterns. And here, I'm not saying that you have to use indicators, candlestick pattern, and chart patterns for every single trade, but the more confluences we have at the same time, the better. And let me show you why it's important to have confirmation signals. If we take a look at this next break of the high, you can see we broke the high right here. So now we are looking out for this resistance to flip and become support. So you can see that right here we had another potential buying opportunity. But in this case, the price broke in the opposite direction, and this would have led to a losing trade. And here it's very possible that we did not have any of the confirmations we talked about recently, which made this trade more likely to fail. Let's also quickly take a look at the downtrend. We can see that we are in a downtrend right here because this trend is printing lower highs and lower lows. And what we're looking out for now is that we're looking out for support that comes from a low to flip and become resistance. And here we can look out for shorting opportunities. When you short, you bet that the market will go down, so you make money when the price falls. And this right here is one beautiful thing about trading. We as traders can profit from the market going up, but we can also make a profit from the market going down. So we as traders don't have to care if we are in a bull market or bear market. We can always find trading opportunities. Alright, so now let's take a look at this trading strategy in a real market. We are currently on the 4-hour time frame on the US dollar euro chart. And as we can see, the price pushed up right here, printed a high. So this right here is our impulsive move. Then the price pulled back. We saw another impulsive move and then another pullback. And where did this pullback go to? Well, if we use our strategy and draw out our resistance level, we can see that this high that previously acted as resistance flipped to become support here in the future. So this right here is a moment where we can look out for a buying opportunity. And as I said, later on in the course, we will take a look at exactly what to look out for. But this right here is the foundation of the strategy. Once again, we can look out for the next move. We can see that eventually we saw another impulsive move. And now remember, as long as we are holding this level, the price is still in an uptrend. Eventually, as price usually does, we saw a pullback. And if we take a look here, we can see that the price actually pulled back to the previous high, right? So here we can look out for yet another buying opportunity. Once again, the price went higher, printed a high, pulled back, printed a new high, pulled back, continued, and so on and so on. And we can actually see that even in the next pullback, the price pulled back right to the previous resistance that flipped to become support. However, here it's very important to just notice that this will not always work. If we, for example, take a look at the next high, you can see that the price actually pushed below, right? You can see that here the price quickly dipped below the previous resistance. But what we still have to have in mind is that even though the price dipped below that point, we are still, remember, we are still in an uptrend as long as we are maintaining this low right here. Alright, so now if you have made it this far into the course, I hope you are. This video was just a very short clip from our full technical analysis course right here on YouTube. To watch the full course, simply click or tap on the screen right here. I hope I'll see you all over there
very, very soon.